All right, welcome to another Touch Grass podcast episode. Today we have Sid and Piyush from the Bima team. For context, I've known Piyush for a very, very long time. Sid, I had the pleasure of meeting at Token 2049 Dubai this year. The purpose of this episode is to talk about the Bitcoin Fi ecosystem. I'm hoping this turns into more of a monthly thing where we bring the boys back on and we talk about how the Bitcoin Fi ecosystem is evolving. But yeah, start us off. Sid, Piyush, give us an intro. Tell us what Bima is. Give us a little bit of history about yourselves, and then we can get into it.
Yeah, for sure. Hey guys, thanks so much for having me on here. It's great to be here. Yeah, I'm Sid. I'm the founder of Bima. We are a Bitcoin CDP attached to a strategy marketplace. We want people to be able to earn yield on their BTC. You should think of us like a hedge fund for your Bitcoin. That's really what we want to do. Be like the SMA for you to be able to lend stables against it and put it into strategies that earn you money. I would say that my background, started with Bitcoin back in 2018. My peers wanted to buy it. I wanted to build on it. You couldn't really do that back then. And one of our biggest things that was there was I didn't know what Bitcoin, blockchain, Web3 wasn't a thing back then. So my first opportunity came about sending a couple hundreds of like LinkedIn DMs to random people, to just random people everywhere. And one person responded, and that was the reason I'm in the space to this day. And it was a guy who was the president of development at Neo Smart Economy by the name of John. He gave me a good opportunity to go under his wing and learn a lot. You could tell that I was very young and I didn't understand a lot about the space, but he's a really good guide, and to this day he's incredible guide for me for anything that's related to blockchain, crypto. In fact, I'm kind of like picking his brain on some ideas and stuff to see what he thinks. But one of the best things that I think we really had the opportunity to do rather that I had to do was learn everything I need to know, understand the process behind learning and building. I worked at Falcon X. I worked at Alchemy. I had the opportunity in working at Casper Labs. I always had these different roles across either engineering or I wouldn't even say business development. It was just like analyst level stuff. Worked in Wall Street at Apollo, but I think my biggest opportunity for becoming orange pilled came working under Tim Draper. He was he had a bunch of apprenticeships and stuff. That he had the Draper Venture Network that was there that was running. It was basically an entire conglomerate of funds that he was a limited partner in. And I was basically doing stuff with the funds, and I came up with an idea with Tim, like, well, why don't we make a fund together that basically does the following. You're an LP in all these funds. They're invested in one of these companies. That company is raising again. Why don't we use the entire network as a double down tool? Because if I invest in the seed round of a company, I'm going to double down in the Series A of a company. I want more people to see my conviction. So I put it up to the table and have people come in and be able to invest in it. And he really liked the idea. We did that with a few companies. If you're familiar with the guys who are bringing back the woolly mammoth, right? There's the dire wolves, the woolly mammoth, and the saber-toothed tiger. So we were investors in every single round at Colossal. So Ben Lam is doing an incredible job now, and he's everywhere now. But it was really like we used to do crazy deals like that. That was always Tim. He always liked to back crazy ideas. And I think that's one thing that he had, especially with Bitcoin. And, he'll tell you the same things. And, I want to speak for him, of course, if you ever bring him on your podcast one day. He'll talk about how he was looking for digital cash since 1992. His first foray into digital assets was the OG Avatar game, which was there in Korea, right, where you get to create your own digital avatar and, Tamagotchis and stuff like that. So he was really interested in all this stuff. And, lo and behold, he hears about this thing called Bitcoin in 2008. He's been waiting for the right moment to pounce. That's when the Silk Road auction happened, and he fat-fingered. I like to call it that he fat-fingered a 30,000 Bitcoin purchase. I've heard rumors about this. I don't know. Some people say it has, and even when you're working with him, he has things that either are exaggerated or I haven't really asked him about this, of course, but the rumor amongst at least his colleagues or people that worked for him was that he was trying to buy 3,000 Bitcoin, and then he accidentally clicked another zero, and he ended up buying 30,000 Bitcoin. So I had the opportunity to run that fund for 2 years as a general partner. Got merged into Draper Associates. Had a prior exit as well to Casper Labs. So I was sitting there trying to figure out what I do next. And I'm hanging out with Vegas in March of 24 with Tim, and I just talked to him about his Bitcoin holdings, and I was trying to figure out what I do next. And I had the idea of doing something like in Bitcoin, because I think the BTCFi ecosystem was revamping itself due to the Babylon narrative and playbook that was happening. So the goal was simple. It was like, well, I want to be able to. Tim has always wanted to make a fund out of Bitcoin. He's never been able to do it. And I thought that, well, what is the number one thing that's a loophole for every American ecosystem or even financial ecosystem? It's debt, it's credit. It's how do we enable these different types of options against, of course, Bitcoin. So why don't you borrow against it? And Tim is known for his eyebrows, right? So his eyebrows like peak up a little bit when he heard my idea and stuff. So I knew that I was onto something. So I ended up building Bima. We raised a awesome pre-seed with Portal Ventures. Tim participated, and a plethora of other investors in our round. I think this was the real way that we got the opportunity to hit that mass adoption vertical for BTC. Is it's stables, and I think the utility for this makes utmost sense. So the story of Bima is really my story as well. And we've just recently launched our mainnet. We are going to be doing some PR pretty soon on some big news. Yeah, I mean we're just very excited in general about the space and of course the longevity of the vision as well.
I hope we get some pre-announcements in this video, and then we clip it out.
Definitely.
Not that alpha.
not too much alpha, but there will be alpha.
Yeah. Piyush, you want to give a short intro as well?
Yeah, 100%. I'll keep it short. But I mean, I got into like crypto in 2018. I used to be, a pen tester or like a white hat, black hat, kind of a mixture, gray hat, you can say. I've worked with many people across the globe to, pen test and, in the Web2 side. That was totally on the Web2 side. But then I got Bitcoin just after pen testing in 2018. I would not say how much amount because I've seen the recent tragedy in Paris. CEO got, so not much, but yeah, I think in the end, then I was like, okay, I have to start building things in Web3 in crypto in general. So that's how I started forking, many applications which are already in existence in space. Of course, I was working in, IPFS because that was something more decentralized. So I started collaborating into IPFS that time, and Liquidity and all that stuff came out from Protocol Labs. Then eventually Polygon was coming in and it was like Indian Ethos. I was like, okay, it's like they were looking for an open sea for Polygon itself. So I, along with some Polygon folks, like forked OpenSea and given it to the Polygon team. And then altogether it was taken into the OpenSea itself. Literally, these guys haven't created a wrapper on top of it. So if we decide together to fuck up the NFT marketplace, we might have done. But I was a good guy. So before leaving Polygon in 22, I was like, okay, guys, are you creating wrapper on top of it or not? So then officially they created a wrapper and things were sorted. And that time itself in 21, I was more into the business side rather than technical aspects because business is more fun rather than just doing and coding stuff personally to me. And that's how I eventually even joined Protocol Labs in 22, where I was head of ecosystem, figuring out many stuff. Even we spun out many entities out of that, even worked with a couple of entities while like Protocol Labs was like, okay, we want to be siloed and just work on your own rather than just exhausting the money of PL. So that's how many entities got spun out. And like last year, I was looking more into the Bitcoin thesis that okay, what should I do next? And that's how I reached out to Katrina and from Portal Ventures. She was like, okay, connect with these folks. I even had a word with many people, and I don't want to jump on other chain philosophy. I was like, okay, it's too much. I cannot do that. So that's how I end up, jumping at Bima and working here since almost the beginning. And yeah, this history.
Fantastic. I think before we get into the yield part of the conversation and understanding the BTCFi ecosystem more, I want to start off with Bitcoin the asset first, and I think like we can all agree that 2024 was like the year of Bitcoin, with ETFs, the president's kind of openly kind of promoting it, and all these sailor playbook out in the open, and everyone kind of replicating it. So I want to start off by asking, how do you describe Bitcoin the asset right now compared to where it was a few years back? What's like the state of Bitcoin if you had to describe it right now?
Yeah. I think Bitcoin's the ultimate fiat, right? It's because when we look at the money that we have today, it's about when people believe in it more, it just is more than other currencies, right? That's exactly how it is when you look at the Forex markets. Is if I believe more in the American dollar, it's going to be more than the yuan or the yen. I think Bitcoin is the ultimate fiat. The more people believe in it, the higher the price goes up, right? Relative to Bitcoin, relative to the dollar, right? A lot of people even say that, well, maybe Bitcoin isn't rising. The dollar is just waning, right? And I see both cases of this. I think it's a bit of both, right? I think, however, I think it's more of people believing more in Bitcoin. And we really saw this story when I was working with Tim. You see a lot of people that really loved. He was a big Bitcoin evangelist, right? So when we were talking with, like, say, Latin American or Argentinian family offices, we knew one that was a millionaire 3 times over, but each and every single time they became a millionaire, they adjusted the inflation rate, and then they lost their millionaire status because of the money going down, right? And that's what we saw, is that they really wanted to subscribe to the thesis of Bitcoin because they didn't want to have something that's inflationary. They wanted something that's fixed in supply and something that's going to be a hedge against inflation. And Tim will tell you it's a hedge against bad governments. Yeah, I think that's a like hedge against inflation, right? So basically what they did is that they wanted to get access to this, but then they were like, wait, look at what happened to El Salvador in 21-22 when Bitcoin went to its all-time lows, within the time period that it was there. They were like, well, we don't want to have that happen to us, so we don't even want to touch it. But how can we make sure that we can have access to Bitcoin, but also stability as well? That's where I think a product like Bima becomes super important, especially in this kind of a use case. You get access to Bitcoin on the long-term upside, and then you get short-term liquidity today. There's a guy that bought pizza with Bitcoin back in 2012, right? 10,000 Bitcoin. I just can't even imagine like how much. Yeah, he's kicking himself in the ass thinking about it, right? It's $1 billion spent on Papa John's, right? And at the end of the day, it's exactly why borrowing structures are super important. Why do we borrow? Why did the third Apple co-founder, he sold his shares in Apple for $800? He lost out on upside. That's why people believe in hodling with Bitcoin. It's because they've seen so many people give up upside when it comes to other assets. So Bitcoin is the ultimate fiat in the sense that it is something that will continually have long-term value. And I think it's something that, okay, we're all Indian people here. I think the biggest thing I was going to mention is like, I think of it like, I teach a class about Mahabharata and Ramayana in my local, temple, and Piyush sometimes corrects me because I'm quite American, right? But the way I like to see it is like the way that all these gods and goddesses in Hinduism used to see the entire lifeline is not in our timeline, right? It's not like karma, for example, is not defined by my lifetime or even the next lifetime or the lifetime after that. It's such a long period of value and purpose. That's exactly how I see Bitcoin. It's a long-term value. You have to zoom out of the picture. You have to look at the timeline, not in the span of a year or 2 years. It's the best performing asset class historically. So it's not something that you can confine to a window or a box. It's something that you have to see the trajectory since birth and inception, which is exactly how I really used to, it exists on a different timeline. So I think people are really going to see that because not only do they, understand that, like, I remember you seeing like Instagram, like pictures and stuff of like posts of Kevin O'Leary, Mr. Wonderful, back in 2019. He'd be like, Bitcoin's a scam. Bill Gates, Bitcoin's a scam. You know what they're doing in the back end? They're flooding Bitcoin, having it go low. They're buying the Bitcoin and then having it go up. That's just the trick that all these people play with these all kinds of KOLs and stuff. They use these.
It's business.
Exactly. So I just think Bitcoin's the ultimate fiat because it's, as more people believe in it, the price is going to go up. Just like you see with the dollar and other, relative to other currencies.
Yeah.
It's the same thing.
Yeah.
I would literally,
love
to go into past. I would literally love to go into the past and be that pizza delivery guy.
Yeah. Delivery guy. Imagine if he tipped an extra Bitcoin. You'd be like, all right, here's your.
Okay. I mean,
Do you think
But
if they were like
it's,
borrowing, do you think if they were like borrowing
I
markets, then all these guys would not fumble their bags?
Absolutely, without a doubt. I mean,
Probably,
dude, that's
yeah,
the whole point of
100%.
borrowing, right? I mean, like, imagine, like, you have 10,000
yeah.
Bitcoin, you borrow, let's say 5,000 Bitcoins worth, you know, you could still use that today,
No,
right?
that's super interesting. And what's even more interesting, I think Sid gave us a Hinduism and Bitcoin analogy before
Yes.
GTA 6, and that sort of blew my
Okay, all
mind.
right. I'm gonna get
That's
clipped for this, but
that's
yeah.
a that's a clip. But Sid, okay, so is that the BTC-Fi narrative, Sid? Like, would you predate the BTC-Fi narrative before even the L2s came up to like Maple Finance, where borrowing and lending for miners actually started? Like, where did the story for Bitcoin finance actually start, in your opinion?
Sorry, for Bitcoin finance started with Bitcoin. It's payments. That's the most basic thing you could ever do with Bitcoin. So of course, Bitcoin Fi, BTC-Fi predated, all of us. I wouldn't say all of us, but 2008. It started at inception. Like I'm saying, I think payments was the initial mass adoption vertical intended by Satoshi in his white paper for Bitcoin. But then people started realizing that this is such an inherently valuable asset that's going to grow over time. We need to have borrowing and lending structures for this because we want to do these operations, like whether you're the Argentinian family office or the person buying pizza, right? I want to have stable short-term liquidity today. So Maple was definitely one of those that really kind of said, like, well, there are all these assets that are growing increasingly in value. We look at this exactly like how we see private credit deals happen at banks, right? I'm Elon Musk or Jeff Bezos, and I want to make short-term liquidity today. What do? I borrow against my Tesla shares. I borrow against my Amazon shares, and then I just don't pay taxes, right? That was the incentive for them. The incentive is much more different because either way, crypto people don't care about that much about taxes, and debt is not taxable. They basically said that, well, I don't care that much about taxes because either way, taxes is never something that we really focus on in the crypto space. But now the vision becomes super important. It's like, oh, wait, I could borrow. Like, if I have one BTC and I'm borrowing, let's say at credit, another, like 0.5 BTC worth of stables, I basically have 1.5 BTC worth of assets that I could deploy into different types of mechanizations, right? I think that's really where the inherent value of this came in. And I remember even when I was in college and stuff, I would, like, the basics of private equity and LBOs is entirely premised on leverage. Why does leverage help you? It's because it increases your return on equity, and it's all because you're retaining the principal asset and getting some new money on top of it because you have that principal asset. So rather than investing with one Bitcoin, you're having 1.5 Bitcoin to use at your disposal, and you make extra gains right on top of that principal, or that you're using for investment. So BTC-Fi is just finance, man. I mean, it's basic stuff. I mean, it's with any asset. I mean, you've done this with stocks, you've done this with gold, you've done this with any type of asset that's valuable. So BTC-Fi is just Fi, but they've just, it started with Bitcoin from day one,
I mean, kind of, I have different take, by the way. I mean, okay, it started from the beginning, from the payments and all that stuff. It was there, no doubt. But frankly, I mean, even the finance part was there, not DeFi part was there. But eventually, I guess, since last year when ordinals runes picked up, people started realizing that, okay, BTC-Fi makes sense in a decentralized fashion, not in the, financial only fashion, where I guess things take off. And many people started building lending, borrowing, dexes directly on Bitcoin while utilizing runes, ordinals, and other stuff. So, and I think even Babylon came into picture, and that's how even Bima came into existence. So, yeah, that's into DeFi side of things if you want to talk. But yeah.
Yeah, no, that's exactly what I wanted to talk about more. Would you say that Babylon set the way for this next entrant of products to come in, where Babylon was like the first mover, like they innovated, and then you saw these Bitcoin L2s come onto the scene? Would you sort of describe it that way?
Well, I would
No.
say with Babylon, I think the L2s are just going to pounce on anything, dude. Like, dude, there are people that are building L2s on, the shittiest chains, and I don't think that it's something that has to do with innovation. It's just that Babylon brought the narrative back, right? They basically were like, listen, like, I'm a big football fan. They were like Johan Cruyff. They brought total football to Barcelona. You know, it's the same exact thing. They brought total football to Bitcoin. They said that, well, we need to have more utilities for BTC other than just payments, right? And for a majority of these people, they don't move their Bitcoin, by the way. They just are like, well, we don't want to move our Bitcoin. Payments is not even a thing they do. They don't want to ever give up custody of their Bitcoin. They don't want to give up their Bitcoin because it's the same exact reasons that we told you. You're giving up upside. That's the way they see it. So I think the way the Babylon did it was the self-custodial kind of staking was really, really, really innovative. It was incentivizing them to basically secure these larger networks and having these time locks. There was definitely a resurgence in the Bitcoin narrative because of Babylon. I think these Bitcoin L2s, like, dude, I was an investor in Stacks. Bitcoin L2s have been happening before Babylon, right? Like Trust Machines is an investor in us as well, and I've known the name for how long, I can't tell, but it's been happening, dude. I mean, people have been doing Bitcoin L2s. Rootstock has been there, right? I mean, like there are so many people that have been there before this new narrative. It's just that there's a new wave that have this resurgence, and Katrina from Portal Ventures, our lead investor, has a very good way to say this. It's a renaissance. It's a revival. It's a bringing back to form and function of Bitcoin. That's what's happening right now. You've seen this stuff happen. It's not like it hasn't happened before, but it's just that nowadays you're seeing more of it because of the mind share that Babylon occupied with the overall market.
Yeah,
I agree.
I think that's super interesting because last year, I think in January, when the whole Babylon stuff was happening, between January last year to like May last year, there were probably 40 L2s, like Bitcoin L2s pop up that I have personally seen decks of, I have interfaced with. If you do the maths, that's like 120 days and 40 Bitcoin L2s. Like every third day, there was a new Bitcoin L2 come up. Was that like, okay, so, and most of the thesis that they had was Bitcoin was not programmable. If Bitcoin was programmable, this whole, BlackRock being BUIDL would have been on Bitcoin instead of Ethereum. Is that something that you see happening in the future where these institutions actually want to build on Bitcoin directly and not ETH? Is that also part of the Bitcoin Fi narrative, per to say?
Well, BlackRock and institutions are always a cycle behind. That's why they chose ETH. I think next cycle they're going to choose Bitcoin to build on. And I mean, that's the thing. Like Athena was a last cycle thing that's now getting formed and function in this cycle because of the ETH narrative that is now. I mean, they're doing pretty good, to be honest with you. With now, ETH shot up in price, which is lovely. But I think the biggest thing that we're really seeing with BTC, these L2s is like .com, right? Like Pats.com versus Amazon, right? It's what makes them different. It is the products, right? It's the teams and the products that make this better. Because dude, anybody can make a Bitcoin L2. Like it's not hard, right? Like L2s are the least technically complex product in Web3. Easily. I think that it's not hard to fork an existing repo, make a shared sequencer, decentralized sequencer, whatever narrative you want to push, and then get a bridge. That's pretty simple. It's like Lego blocks, it's like rated 8+ Legos. We want to build the next Lego Death Star. That's the biggest thing that's there. So I think everybody is saying the same thing in different ways. But the Bitcoin L2s, they're some of them aren't even Bitcoin L2s, dude. Like they're just ETH L2s that have them, and we're friendly with everything.
Did you ever think about building your own Bitcoin L2? Was that
no? Get the hell out.
No?
Yeah, we don't have enough money yet, but we'll see. We'll see. Athena was the same way, right? Athena was just going to do their sort of delta neutral stable, and then they got enough money to then be able to be like, oh well, let's be able to make our own L2, make our own perp decks, make our own whatever, because they have enough they have enough revenue to do all this stuff, right? They don't care. They can do all this stuff because they have a good support of all the major institutions with this, but I think ETH has always been the main adoption vector for programmability in crypto because of solidity, right? I think solidity is what makes Ethereum the best. And I think that's really something that was there. It was like, what is the difference between Bitcoin and Ethereum? Bitcoin's Bitcoin. You can only do these very basic operations on it. But then what made Ethereum so successful? It was Gavin Wood proposing solidity. It was saying that now you can build products and companies on this. And whatever you couldn't do and wanted to do with Bitcoin, you can now do on top of us. The reason that Ethereum is even as successful as it is is because of programmability. So I think the biggest thing that's there is the biggest barrier to Bitcoin's liquidity will be programmability and custody. Those are the two biggest things that I think are going to be super important to unlock a lot of Bitcoins. I wouldn't even call it untapped potential. It's just potential. It's
No, I
just,
agree. I would say the custody angle is a lot bigger. And I was talking to Piyush about this when I met him in Dubai as well. Like KG, for instance, when I was in Hong Kong, I met so many family offices that were like, I personally know people in mainland China that have like 1,000 Bitcoin, but they don't want to do anything themselves. Like they just want to give me the 1,000 Bitcoin. If I can give them 1-2% yield, they're very happy, and we would make the additional upside. Piyush said, like, do you actually see the custody solution stuff getting better, and the self custody stuff getting better? And the Bitcoin price
I want to
rates?
add,
Go
I
ahead.
want to add some part on the last part as well, because there were 80 L2s, right? But what was the liquidity they have? Like
Yeah.
even now, if we talk about, it should have 80 billion at least, like 1 billion each. But I think they were not able to tap in the BTC liquidity till now even. So I think even they have taken, let's say, custody of Bitcoin, still they were not able to do that. Because one, Bitcoin holders just want their Bitcoin on Bitcoin main chain. They don't want to move it much. Even LSTs, LRTs, they haven't able to scale much. Like, okay, billion or 1.5 billion was the max. Even that was Lombard, which did a great job. But no one else was able to succeed. Even there were some rumors in the market that, okay, you take custody, it moves back. So what's the sense of of LST? But it is what it is, I guess. But at least in the BTC L2 space, we were not able to achieve anyone even L2 which were able to track or attract a huge amount of BTC liquidity yet. So just looking for it.
Yeah, I think now we can kind of dive into the how Bitcoin is used as collateral. Because as you said, like all these institutions, they're accumulating insane amounts of supply for them for their long-term holdings, and they would love additional yield on it. Like that's what makes ETH kind of more attractive for these institutions as well, right? So right now, how is Bitcoin being used as collateral in DeFi, and also like other use cases outside where you can use Bitcoin as collateral, go buy a house or something like that. Is that happening right now? And especially, how are people using Bitcoin as collateral in DeFi?
So do you
Yeah,
want to
good
take
question. Yeah, I think one of the biggest things you're seeing, simple, it's all fake. It's all synthetics, right? LSTs, they are synthetic representations of these assets and more programmable ecosystems. I don't think, okay, well, if it is being used as collateral, it's being used in some tertiary bridge or meta layer, meta protocol like um, runes or ordinals or BRC20, which is not bad. This is not bad, right? However, what this is really showing us is that, well, if I have all of these different types of assets circulating in the market, what is really special about Bitcoin then, right? Because you have WBTC, LBTC, EBTC, it all becomes a hemorrhage game, I like to call it, right? How do typical L2s work? How does anybody work? How do we even work to some extent, right? We do give token bribes, right? We give token bribes to specific entities and LPs to be able to give TVL to us. And they're looking for some yield on that, right? They're like, okay, well, what's the speculation of this asset to be able to do it? But this is why you see a lot of people points farm, right? Some people really love points farming, but good Lord, they're predatory. So that's what you see with their BTCs, that they basically use that as collateral to bridge, wrap, and stake. And I'll get back to your custody piece. I know you mentioned that very briefly, Rachit, but basically what you're seeing here is a lot of token bribes, especially amongst a little bit more of the sort of Eastern like Eastern crowds. You see a lot. They're much more, they're more able to do this. They're like, oh yeah, like we know the game. We're 2 or 3 cycles ahead of the United States. Well, yeah, give us the token details. We'll give it to you. We'll farm it. We'll be able to take it out. We'll do this and that, whatever it is. It's all good to go, right? Perfect. But then they also have the United States. The United States, if you go to Orlando last week and go to any of these people in corporate treasuries with Bitcoin on their balance sheet, and you told them you need a bridge, you need a wrap, you need a stake, they're going to be like, what the hell are you talking about, dude? What, like, is this a fucking vampire that I have to like stake them in the heart or something? Like, I don't know what any of these things are, right? And you have to educate somebody there on what MakerDAO was. These people aren't, ready for DeFi at all, So I think there's two ends of this, which is, how do we explain to them how to earn yield on their BTC, right? Asia and greater the Eastern region, of course, is ready to take a little bit of risk. Not always, but they're a little bit more likely to take risk to bridge, wrap, and stake. That's fine. But keep in mind, this is 38 billion. You go to Bitcoin layers, that's 380,000, 370,000 Bitcoin that is just consistently looping in the ecosystem because it's the same player. Yeah. It's the same every cycle.
If you go back to DeFi Llama and you check January 2024 to May 2024, if you look at the chains that are actually prevalent, I don't want to take names, but you can actually see the TVL go from one to another. And there was this one lending protocol that was facilitating all of it. And
yeah, we know which one you're talking about. Oh, we know which one you're talking about. Yeah.
So, even the same address. So I've seen.
Yeah. It was the same. Yeah, it was fun. It was a fun time because that's exactly how it is, man. That's the game. It's the game, right? It's like, like even when Trump was running, right? When Trump was running, people would tell him like, oh, how could you say that, that the system is rigged against people like us or whatever. He says, because I've played it. Very simple, right? Dave Chappelle said this as well in his sketch or whatever. He said, it's very simple. It's like, I've played the game. I know that it's rigged against you because I've played the game. That's exactly what people are doing. They know how the system works. There's a lot of insider deals that happen in order to make sure that you can get those vanity metrics and stuff. And to an extent, we use the same. We're very transparent. It's just that we need to incentivize capital. Athena's done the same. It's how everything works. So now the custody aspect comes in. How can you use Bitcoin? I think the future, and I don't want to give too much alpha because we still want to retain some degree of moat and in some regards to our tech, of course. But what I would see people doing is, I think you're going to see a lot more, like, here's what I think. It's like people are going to be a lot like a Walmart or a Target or any kind of supermarket or grocery store. You're going to have multiple checkout flows for the same kind of product. You have the self-service, you have the 15 items or less. The 15 items or less are absolutely going to be used for the people that have stockpiled Bitcoin. These 1,000 BTC family offices, these institutions, the MicroStrategies of the world. You are not going to go up to Michael Saylor and tell him, oh, you should bridge your Bitcoin. He's going to say, get the hell out. I don't want to do any of this stuff, right? There should be zero principal risk on the BTC. So then the question becomes, if there's zero principal risk on the Bitcoin, where should the risk sit? That's where the stables become super important. You need to have control and custody rather than over the Bitcoin, over the stables. And this is where, at least what we're doing is going to be announced quite soon. But I think self-custody is the biggest unlock. And you need to follow a UX that American institutions are familiar with, which is the lending and borrowing system when it comes to mortgages, right? If I am, borrowing against my home, or I'm borrowing against several different types of assets, the bank isn't coming and grabbing me by the grassroots and picking it up, right? That's not what they're doing, right? They're not taking a sliver of my house, like a slice of cake, and taking it as custody. They're using legal wrappers. They're using legal wrappers to their utmost capability. And while I do agree that code is law, I also believe that law is law, right? I think there's a reason that we sign even if we do LP deals with this code is law aspect, we still sign agreements. There's still that legal aspect that's there. And I think that if you're going to have to use Bitcoin to its utmost potential, you're going to need to basically utilize the full power of the law to be able to kind of utilize it, right? I don't think DeFi is the ultimate winner. It's important primitives, don't get me wrong, but that's not the end all and be all. There's still the DeFi is at 100 bill. Traditional markets, hundreds of trill. It's, it's 1,000, 10,000x difference. And I think that's really the biggest thing, is that you still need to figure out how can you enable these kinds of primitives on chain. And I think, DeFi is not going to be the end all be all for all these problems. However, I do think technologies will be enabling you to use these TradFi primitives on blockchains, which is not the same as DeFi. It's just TradFi on blockchains. So that's really how I see these things, is especially with custody. That's the biggest component. Biggest component is self-custody. 100% is the biggest component.
Yeah.
So more of, you can say, CDFi.
Yes, exactly. Yeah.
Yeah. Before we get into the Bima side of the stablecoin part, I had a question. Like you mentioned self-custody. Why doesn't Coinbase just do this? There's a huge market for this. They do the ETH staking part. Why don't they just kind of create a market for all these huge Bitcoin holders and incentivize them for borrowing? Like Coinbase can kind of just take this market, right?
Well, have you ever worked for a big company and then the company basically has a lot of hoops and ladders that you have to jump through in order to get something done? That's what Coinbase is. That's what Coinbase is. Even Wall Street, to some extent.
I would assume Coinbase wants to be in the game where someone builds this out and they just acquire it.
That's their business. They're better. Like Google. It's like Google, right? Google, look at killedbygoogle.com. How many products have they started in their, like there's over 400 companies and product ideas that have been completely nixed by Google. I used to look at this stuff to make fun of it all the time. There was like a Google search monitored by the Chinese Communist Party, the CCP. I was like, what the, who was coming up with this shit, dude? It's getting killed and axed within a year. So like not even one full cycle, it's getting axed. That's exactly what's happening. They're better acquirers. Like what are some of the best products by Google? It's going to be, YouTube. YouTube was an acquisition, right? That's one of the best products that they have. It was a pure acquisition for $1.4 billion. Now it's a $300 billion worth, product, right? That's exactly what the entire premise of this is. So one thing that we really see, especially within this kind of context of these kind of companies, is that there is a lot of organizational friction, right? And we're a lot scrappier. And they, this is why they work with startups in the first place, right? Aerodrome is a startup, right? On Base. The Base is a blockchain initiative. It's not hard. It's a very centralized blockchain, but they still do it, right? It's like, we don't care if it's a centralized blockchain. We just want volume to go onto it because we're Coinbase, right? So anything that's easy for them, they can do it. But maybe next cycle, you'll see someone do Bitcoin staking. Right now they have Bitcoin borrowing, but if Coinbase goes up to a MicroStrategy and says, look, you can do this, you can even withdraw it and move it within your Coinbase accounts, he's going to say, he said no. He said, no, I don't want to do this. I don't want to do this. I don't think I'm interested in moving my Bitcoin. That's it. You cannot, you have to build around them.
So Sid, would you say that the ideal framework for Bitcoin to actually max amplified into like the DeFi space is you need a set of ways for these guys to just get someone on the phone and be like, hey, do this, do that. And it's more like traditional. That's the, like, you need a wrapper like that, and then you have a guy that's doing DeFi at the back end.
Yeah, that's literally what I'm saying. Like, we talk so much about debt, we forget about credit. And credit is a much bigger market. I wouldn't even say it's in a bigger market than debt, but it's a much more important market, because if I'm on Wall Street and I want to basically get margin on my assets to be able to borrow, or whether I want to use it for leverage or I want to use it for a strategy or trade, I get margin right on my Wall Street EMS. Right, I just basically trade, let's say, 100 SPY. I want to get some mandated margin and credit over it. Apollo or someone's going to be like, okay, here's your credit. Here's your, the interest rate that we're going to charge. They lever the hell up and they go. That's it. That's exactly it. I think everyone focuses on lending and borrowing, but they forget about credit. And I think credit is going to be a very important market, because everybody, even us, right? Our entire product is a CDP, right? Collateralized debt position. I talked about the CCP before. Maybe we should be a CCP, right? Which is I would even call it like a UCP, right? An uncollateralized credit position. Wow. That could be something that is extremely important. And I think you talk to all the market makers like Selene or any of these different types of market makers that, I was playing a football match with one of the, guys who runs business across the entire division. One of the biggest things that's there is uncollateralized lending. Anyone that can do uncollateralized lending up to a certain amount, that is something that is really awesome, especially for institutions. But keep in mind, there's going to be a lot of bias that you have there, right?
Yeah.
Because you're not seeing the wallet addresses of people who have given you custody, which gives you that safety guarantee. Now you're interfacing with people who may or may not withdraw their Bitcoin at any time and screw up your entire peg, right? I think that's one of the biggest things that we see there. So there's like Goldman, you have to be very biased with your origination. You have to give credit assessment, credit scores. You have to say there's a difference from the MicroStrategy versus the Chinese miner that you don't know. I think there's a very big difference, and no insults to the Chinese miners that are there. It's just that there's a lot of sketchy, shady shit. It could be American miners that you have no idea with, right? I was talking to somebody at one of the BTC events, right? And someone said, you should talk to him. You should talk to him. And I thought this guy's like a big family office. And I said, oh, how much are you looking to offload? The guy got really offended. He was like, oh, you should never ask someone how much Bitcoin they have. You know how much I had? 0.1 BTC. I was like, fuck you, dude. I was like, you're talking so big about your shit and you're talking your 0.1 BTC. Like, it was so like, it was like ridiculous. So this is the kind of stuff that you have to say. Like, these are the people that, and this is what we've seen even in family offices. Anybody can be a family office. You can have $2 in your bank account. You could say you're a family office, right? And that's exactly what we see. It's all about it's about the hype, right? That's it. Yeah. So that's why you need to have some control over it. So it's a different.
And that's where the legal wrapper comes in that you were talking about. Like, okay.
Yeah, exactly. I think it's important to have it. I still think that you should still have the CDP, right? Because there is a much more permissionless nature to it. But like I said, it's 2 checkout flows, right? What is a typical DeFi user used to? Self-service. You know how the CDP works. You've used Maker. Go down that route. An institution who doesn't know what MakerDAO is, that's what the 15 items or less with a cashier is. We're the cashier in this case.
Yeah, I think the uncollateralized lending market is again kind of heating up. WildCatFi, recently they are kind of started again this year. And I think like the credit market is just dried up over the last 2 years, and I think it needs a revival. And I mean, if we had like 3AC kind of players, that's why the markets went up so crazy across alts. Yeah, back to Bima. Like, one thing I was curious about is your stablecoin. How much of it is purely backed by Bitcoin, and how much of it is other alternatives? Like, what is the percentage for Bitcoin and other derivatives?
Yeah, I would say that a majority of our DeFi protocol is going to be really like derivative focused, right? Because that's where the majority of the programmability sits. Ethereum's dominance over the last 8 years was the biggest reason that we saw a lot of liquidity move towards them, right? So I think one of the biggest things we see is just LSTs have been our sort of fervor, right? We like LSTs a lot. I mean, just look at typical lending structures. It's pretty simple to understand these things. But I think the other end of this, which is also very, very important for us, is this entire nature and idea for it's really this entire component when it comes to these assets that no one's looking at, right? What are these assets that are the edge cases that no one is looking at, right? Not necessarily that, listen, we respect DeFi Llama, but that's not the end all be all. We want to make money for our users at the end of the day, right? We want people to be flexible, right? Because imagine, this is the way that I think about things, right? I'm an ecosystem. I have gotten $100 million worth of BTC to divvy up amongst my ecosystem projects, right? I'm on late L2, it's called that, right? Let's say there's Bima, there's a lending protocol, there's a DEX. Each of us get 33 mil, right, of that 100 mil. But we want to grow. We want to get more. We want to do more. So now I've just become competitive with these two, right? Because as they get more Bitcoin, as the ecosystem gets more Bitcoin, and we want more, what do? Right? We are basically lowering their, it's an opportunity cost, right? If I have to give my Bitcoin somewhere, there's an opportunity cost. And that's the biggest thing that I noticed that's different about the dollar versus DeFi. There aren't really, you have found a way to streamline the opportunity costs in DeFi. For example, I'll use this example, right? When I have Bitcoin, I want to earn yield on it. I go through the bridge or wrap and stake with LSTs. That's 1 degree of yield. I can put it into an AVS and get an LRT. That's another degree of yield. And I can yield farm on it using Pendle. That's another degree. You have 3 degrees of yield off of 1 Bitcoin. You cannot do that with the dollar. You cannot do that with the dollar. That's what the power of this space is really about, entirely premised in. It's what can you do with this that you couldn't do with the dollar, right? And I think that's one of our like biggest things that's there is like we accommodate a wide variety of assets. For example, if I were to supply BTC to something like an Aave, I get back a receipt BTC, Aave WBTC. We could take that as collateral. So you could get the best of both worlds from both of these. That's really what we are. We are really a way for you to get the best of both worlds. So we're trying to be flexible with LPs. This is really like a hedge fund, right? And We want people to be able to, like, yeah, listen, if we accommodate to institutions that are more DeFi primitives, right, and let's be very real here, the institutions run the space. The institutions run the space, right? Like that's very clear here. It's there aren't that many, my mom and dad using DeFi kind of stuff. There's not much, right? And if anything, it's in smaller numbers, right? And that's the biggest thing. In that regard, I would say that we would cater to the institutions so there's a pathway for retail. And I think that's really what you've seen with a lot of these products. Like Aave, it's an institutional honeypot, right? All of these are institutional honeypots. Any DeFi protocol you're talking about is an institution. It's whales. It's whale dominated, just like TradFi. You have LPs. So yeah, I think that's really how we integrate, right? We want to work after Bitcoin, the LSTs across the value chain, right? What form does your Bitcoin exist in? We will accommodate it for you. That's really what we are. Like I said, it's less of a startup sometimes and more of solutions engineering. How can we be it's good to be scrappy and flexible, but at the same time to understand risk, right? Like we don't want to take the sketchy receipt token and we'll be like, well, what the hell is this? Like this is just some random, like there's no backing behind it or whatever it is. It's just, we wouldn't do that. So, this is probably stuff that we would do for this. So yeah, just wanted to sort of say that's we're flexible.
Yeah, as even Sid mentioned about different LSTs, LRTs, and receipt tokens, just want to mention, because every other BTC has said, even the receipt tokens, so over-collateralization ratio will be different for them, at least for the security point of view. So we have taken care of that part as well.
Got it. And would you guys say that most of the yield in the Bitcoin Fi ecosystem comes from these lending borrowing mechanics and the yield earned on that trade? Is that where Bitcoin yield actually comes from?
Yeah, for now. For now.
I think, is it real yield? So that should be the
all
question.
Right. I would say that, I don't know, right? It's like, because imagine this, if I'm a lending protocol and I'm lending and borrowing out assets, right? Who's the other side? It's an institution. It always has to be somebody who's willing to borrow. But here's the biggest thing that I see, right? Like the demand for borrowing Bitcoin is nowhere near the demand for borrowing stables against Bitcoin, right? So why would you just use some sort of a lending protocol when you could use a CDP and the stable is utilized in liquid strategies? Like that's what I think is much more effective. I think I was always bored with private credit. Okay, like it's a safe mechanism, like you'll get your money back, but you're gonna like have the same issue. It's like, well, who's gonna give it to you, right? It's better for you to basically mint an asset and be able to utilize it because look at the borrowing rates for USDC. It's 13 to 20% APY against your BTC. Good luck. That's quite a lot. So I think you're going to find that there's a lot that you could do with strategies with the stables, but you should think of us more as an intermediary, right? And that's why I call ourselves like a hedge fund for Bitcoin. Like we don't want to be a full-on stable coin like USDC or USDT. We want to be a way for you to earn yield on your BTC, and the stable is just the intermediary like throughput for you to be able to do that.
Even just to add on, basically, directly playing with BTC doesn't make sense. Using stable, you can generate same amount of yield, even with a lot of more security, where BTC asset is not, let's say, you don't have any impermanent loss on the BTC asset, be it in any form. So I think that's where, of course, some insurance stuff is also coming into play. Okay, a lot alpha, but yeah, Bima. But in the end, it's kind of like you have BTC, you borrow against it and use it for yield. And this can be in a CDFI fashion as well. As Sid mentioned before, that okay, you have you have got the stable after borrowing from the BTC, and then you use it in a fashion that okay, you are generating yield, all the strategies, which whatever the hedge funds and these people can run, and then use the receipt tokens in the DeFi side. That's how I guess in general stable economy is also growing. That's how even we want to showcase in a balanced fashion. But okay, DeFi will be there, but CDFi will be there as well.
Got it. And then Sid, you mentioned that for now, lending, borrowing is the only way to get real yield in the Bitcoin Fi space. Talk to me more about like, what do you envision this in the future? Like, what is the next level of yield? And don't say you can deposit Bitcoin, borrow ETH, and stake ETH. I've seen those threads too many on the
That's some
timeline.
bullshit. Yeah, that's some bullshit.
Yeah.
Yeah. I think I think half of that is cool, right? Which is borrow ETH against Bitcoin. Makes sense in today's market, right? But I would also say that the biggest thing that, ETH is the ultimate stable coin, blah, 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 whatever it is. But it stayed at the same price for, goddamn forever. But I think one of the way that you can earn real yield is what's the most liquid asset other than Bitcoin that can be utilized in, rather than most liquid, what's the most volumetric asset? Stables. It's always stables. What are hedge funds taking capital in? Stables. So I would say that real yield on BTC needs to happen with USDC, USDT, and any of these different types of tertiary liquid assets. And then you basically just calculate the cost basis. For example, 2 BTC, like let's say we have $100,000 worth of BTC, 1 BTC, right? $100,000 worth of BTC. We borrow $15,000, $50,000 worth of USBD. We put it into a strategy that's a liquid on an exchange. We get that yield, a 10% APY. What we're basically getting is 5% APY relative to the Bitcoin, right? I think that's the biggest thing. It's all about the cost basis. So real yield on Bitcoin is there. However, it needs to be done against the cost basis. And that's why our system works in this manner. It's like the loan to value, So yeah, that's really how I would see the real yield there.
Also, who are the type of LPs currently depositing into Bima vaults? Like the type of users? Are they like mostly natives, or other liquid funds are kind of using their stack and to earn more yield? What's like the type of LPs currently interacting with Bima?
It's a bit of everything, to be honest with you. Of course, in size, it's institutions, but we still have an amazing community in our Discord that's actively using our product. So I would say that you're having like someone is putting like $900 worth deposits and going in and out and in and out and in and out, which is nice, right? Because at the end of the day, it's a way for us to be able to learn about what we are sort of catering to. So yeah, I mean, mostly, of course, we work with LPs, right? This is a hedge fund very much at the end of the day that also has a streamline for retail to be able to access these different types of assets. Some assets might not be fully available to others due to KYC or whatever it is. We would we VPN lock the app, right? But I think one of our biggest things that we would see there is we have an entire, it is a hedge fund, right? Like I've raised for funds, it's the same exact thing. It's like, how do you create these deals with people that have these larger big pools of assets? So very institutional, I would say. Retail is important. But what I would want to say and focus is that I would probably want to have a 70-30 split, hopefully, between institutions and retail, because I think it's really important to open this up. Because one of my biggest things that I always wanted to do when I was running my fund, I wanted retail to be able to en masse crowdfund a venture fund and invest. You see this now with, for example, like Echo and Legion. Like I wish I would have done that back in the day, right? But I think the Drapers are very risk averse when it comes to regulation or RIAs or any of these different types of legal risks and parameters. So one of the biggest things that I really wanted to do is I wanted retail to make sure that they could invest alongside the big boys. So yeah, it's very institutional, but that doesn't mean that we deny retail.
And then Sid, where does the Bitcoin mining community fit in? Like, would you classify them as more institutional or retail?
Institutional, without a doubt, institutional. I mean, I would say anybody with like more than $1 million worth of Bitcoin is classified as an institution in our end, right? Our retail, our highest average, like when we talk about retail, it's not the same people that are talking about Web2 SaaS retail, right? Consumer, right? Our average holdings and net worth per retail user is a little bit closer to $1 million than it is to the person buying Starbucks, right? It's a little bit of a different case here. So I would definitely say 100%. It is 1 billion. It's how do we enable these players to come in and do that. So yeah, I would say that's yeah.
And from what I've heard, since like these bigger institutions like BlackRock have come in and they've started buying a lot more Bitcoin, I've heard this from Bitcoin miners themselves. They feel like the attention that they used to get from like players like Maple or Clearpool has sort of come down, and their leverage to negotiate deals has come down. Is that true with in terms of like Bitcoin miners and their negotiation powers with bigger players coming in? How's that landscape forming up?
Yeah, I think we would need to, once again, this is an entire premise of what we are doing, because there's a difference with how we would work with miners and how we would work with corporate treasuries, right? I think when people, like, I don't think you would necessarily want to do uncollateralized or unsecured lending when it comes to miners, right? You would need to have them pay some interest. You would need to have them, have some sort of degree of margin callability on these assets, because they're not using it for yield. What miners are going to be using this for mainly is payments, right? Pay the bills, pay the house, stuff like this, right? But the inverse of what we would see with this as well would be, well, listen, if I'm a miner and I want to have this huge stockpile of BTC, they know the token game, they know the bribes, right? Like it's Trump again saying, I know the system's rigged because I play it all the time, right? They're very aware. So I would say that there's a very big difference. Miners, we absolutely, if miners want yield, then yes, we're gonna say hey, yeah, by all means, we're gonna just have this product for you, whatever it is, right? Whether it's self-custody or otherwise. But if they're going to need to make payments and let go of the principle that they're borrowing against, then I'm yeah, well, you're going to need to probably we're going to need to have some sort of a claim on it, and then give you some dollars against it in a very easy manner. So yeah, I think that's really the biggest thing that we see there.
But yeah, I mean, even miners can be a yield generating opportunity for us. I will not share much, but it's kind of like they're borrowing, then buying back, they're borrowing, buying back. Of course, the over-collateralization ratio
they can be sources of yield as well, right? I mean, listen, once you get exchange liquid with USDC or cash, anything can be a yield strategy for you. You could invest in equities for all we care, right? It's yield on Bitcoin is it's CeFi. Right? There's no the only Bitcoin DeFi operation that's going to be there. It's lending, borrowing, because those are the only aspects there. And then anything else like staking is just points games, right? And just inflationary sort of supply mechanisms. But I think the main thing that you're probably going to see here is it's miners are a source of yield and a demand for yield as well. So just you can do a few things. I think miners run Bitcoin and they run our product as well. I think it's very important to work with these guys, and they have huge piles that they're looking to earn yield on. That's basically our job.
That makes sense. And then the flip side to that question said, since you've also done the LP route for a fund, from what I've heard from Bitcoin holders or people who want to get exposure to Bitcoin, now that there are so many vehicles with the Bitcoin ETF and more institutional vehicles for them to get exposure to these assets, has that reduced interest for retail to have exposure on chain for Bitcoin, where they're okay, we understand this. We were talking about the wrapper side where you need a front office where you can call and be hey, what's up? Do these vehicles like the ETFs not encourage DeFi usage and to actually be extractive towards that ecosystem?
No, I think it's, like I said, two checkout flows, right? Just because you have self-service and just because you have a cashier doesn't mean you still don't get the bags checked. Still doesn't mean you don't pay, right? It's just, what is the user experience that's most familiar to a specific user over another, right? So retail is definitely going to use the self-service a lot more. Institutions are going to use the 59ers or less. So I don't think it's extractive. I think it's parallel.
Got it. Okay. And then do you think these ETFs turn into a place where once regulatory bodies feel a lot more comfortable with ETFs also earning yield, we saw this on Hong Kong where they enabled it? Do you actually see yourself working with a BlackRock where they have the ETF and now the ETF also earns yield? Is that also part of the thesis for Bitcoin-Fi overall?
Yeah, without a doubt. I think we have everything in place to give them this offering, right? We still have a little bit more to go. Don't get me wrong, right? We're early. We're always early, to be honest with you. But we are really focused on working with the blue chips, right? Because at the end of the day, we know the tech, and they don't care about the tech. They don't care. Ask anybody with a lot of money. They don't care. Tim, even to an extent, he was never somebody that cared about tech. He was always about the big idea. How do I make money on this, right? They're the guys running all this stuff. It's the money guys. They just see Bitcoin as a vehicle for money, right? So they don't care about, oh, you could bridge or you could have trustless bridges. They don't give a shit. They're like, how do you make sure that we can get money on this without without losing our money? That's it.
Yeah, you know what would be really funny in the future? If we had institutions report on their balance sheets that we have X amount of points and 1 point is speculated to be this.
That's so funny. That's so, like, you have the points bar that's there, and it's basically like one of those, like, yeah, dude, that's so, that's intangible assets on the balance sheet, man. That's like, you have to amortize the fuck out of that, like, it's something, you gotta do something with this shit, dude. Like, there has to be something with this, but no, that's what I'm saying. Like, it's like, one day, like, I think for the future, if Trump is really going to do something big for crypto, he's going to make the GAAP, the accounting principles, find a way to wrap around this space. The moment he does that, it's going to be so much. Either it's a dual-edged sword, right? Like if ETH is a security, it has its own issues. If ETH is a commodity, it has its own issues. That's why we like this kind of like this liminality, right? Which is that it's in this kind of gray area, and we like those gray areas because there's a lot of like, plausible deniability that people can have with this stuff, which makes better products, right? It was the same way with Uber. It was the same way with Uber. Uber was illegal. Uber was illegal. You couldn't do this. I mean, use a gig card to rival licensed taxis? How could you do this, right? But they eventually overlook. Now you look at this, all the taxis have Uber because they realize that they can't beat the technology that they've made, even if they have the license or not, right? So if I go to New York and I walk out at Penn Station, I still take a taxi. I look at the guy, they have Uber, they have Lyft, they have these things ready because they're like, we can't compete with the discoverability of this because they have us beat. It doesn't matter if the thing isn't legal. It matters the fact that they're finding the loopholes to kind of get around these things. So I think that's really where innovation also becomes important. Is this just like, how do you find those gray areas?
Got it. And then, final few questions from our side. Sid, Piyush, what are you seeing in the Bitcoin Fi ecosystem that's new and innovative to you? Like, what are you guys excited about, apart from Bima?
RWA, because you can borrow against it.
Yeah. We don't want to throw too many buzzwords at you guys, right? But there's a lot to be, very excited for. I think it's vaults, it's yield opportunities, right? It's just who is making these yield vaults, who is making these strategies, and who is managing the way for illiquid assets to become liquid, right? That's always going to be a very important component for us, right? And that was my whole thing, right? That was my jam, right? I always wanted to be, finding ways to make illiquid assets more liquid. I mean, we've done it with startups, you've done it with, tokens and stuff as a market maker. So that's my mission, is just how do you enable illiquidity to be throughput into liquidity? In terms of innovation, I would really like people who are doing zero knowledge on Bitcoin. I like people who are building right on these different types of tap rates and stuff. So, like Oracle partners are nice. I think there's a lot that I'm generally very excited for in terms of like a nerdy tech component, but yield. I mean, anybody that can get a wave, I think the best people are going to be yield marketplaces, which is what we're going to have, right? We want to basically be like that's what we saw with all these OG DeFi stuff, right? Like, what was our identity? Like, if I talk to somebody, they say we're a liquidity fork, we're this fork, we're that fork. Cool, but I think that we're so much more, right? With the way that we've engineered our entire system, we started off as a liquidity maker fork, right? And we had elements of like Prisma's troves and stuff here and there. But I think one of the biggest things that we really, saw to really scale these things was just we need to have more. After you mint the stable on Ethereum for a maker and all these places, the instruction is to go to Aave. There's not much you could do for yield. Go to Aave, go to Morpho, go to Compound, do stuff there. That's not so enticing to me.
Yeah, I mean, in the end, the alpha is anything you can enable pegged to Bitcoin. We can enable this as a collateral.
Yeah, exactly. I think that's really something.
Do you wanna throw some names out in terms of teams that you're bullish on that you're following?
Of course. I mean, listen, Plume is doing wonderful stuff for the RWA space. They're very nice people with us. They have to change their name though. They say, like, we had to quote tweet something the other day. It was like, okay, can you quote tweet this? It says goons under control. I was like, you said goons? I was like, what the fuck are you saying? Like the word? I was like dying in the Telegram group, and our CMO was like literally like, he's like, why did you say goons, man? I think this is like hilarious. But Plume, wonderful team, incredible product, and I think that they have all the right stuff working for them. Succinct, doing great stuff with the zero knowledge products. I think they're really focusing out on how to do this on Bitcoin. Of course, our LST buddies are phenomenal. I would say Hemi is a killer machine. We're deployed on Hemi, and we're very biased because they're helping us out quite a bit, but they are phenomenal. I mean, amazing team, amazing people, very OG team, runs in their blood, and, they've been very successful. So I would say, a lot of products that we're very excited for, BracketFi, very, very good product. Like, we wanted to figure out how do we enable a lot of optionality and customizability to our Vault product. We need to be able to do X, Y, and Z. These guys basically figured it out. How to do CDFi on chain. They figured it out, and they're amazing. I really love those guys a lot because they are people that I think have been able to figure this out to a degree. Like, we hope to basically onboard a majority of our hedge funds through them so that we could be able to work with them in that manner. So I think there's a lot of fun stuff that's coming out, and I'm genuinely Lever. Julian's a friend of mine. He's building Bitcoin RWA for America, right? Which is basically like, once I have liquid assets, we want miners to be able to access really, really cool strategies in the American economy. Like, how do you be able to do invoice factoring amongst truckers? Or, it's a very, very it's a very based, very based idea that he has. So there's quite a few, and they're doing incredible things, and we're all working with all of them. So of course we're biased, but we're working with them because they're cool people. So there's a lot that's really there to be excited for, especially in the Bitcoin space, because everyone's getting their eyes back on Bitcoin.
Yeah, I think
I can name some.
Go for it.
Like, of course, Bitcoin OS is something interesting because they recently, did with the UTXO Bros, Cardano and them. Then I guess Middle is something interesting where they are literally enabling runes, ordinals, or directly you can
very good shout.
You can play with Bitcoin mainnet and in an EVM fashion, or like both way routes. That is super interesting. I'm bullish on BitVM stuff as well. Which will be the end goal? I'm not sure. Like BitVM 1, 2, or a combination of it, because everyone have their own version, be it Code, be it Fiamma, be it Alpine, be it Nubed, or Citria. So I think everyone have their own version. Have to see which one will be the end goal of it, or it will be a combination. Other than that, I guess there are many new stuff coming directly on Bitcoin main chain, which can be plugged in an EVM fashion. I'm bullish on those stuffs. There are some stuff which are already in just at the MVP stage. So they don't even have the name, but this is what I just want to share.
No, that's awesome. And I was going to shout out the Bitcoin OS guys as well. So Sid, for context, me and Piyush were on a panel with Calvin, and he asked us, what is the biggest risk to the BTCFi ecosystem? And, I'm not technical, so I was like, price. And this is 2 weeks ago when price wasn't doing that well.
Right.
What do you guys think is the biggest risk to the BTCFi ecosystem?
Custody. That's it. It's risk. What risk are you putting on the Bitcoin? I think the only thing that's there is that if you figure out how to do self-custody, you're kings or queens or monarchs. I don't know. I'm based in the States. I gotta be PC a little bit, but I think it's custody. That's the only thing that's remaining, is how can we figure out custody? And if you do that, you're the winner.
I agree, because if Bitcoin whales, they don't lose their custody on Bitcoin main chain and can have everything in self-custody fashion, they don't have any impermanent loss, and they will be like, okay, you can give us real yield, and you're not losing any part of Bitcoin. So I think ideally every BTC whales, miners, even family offices who have big assets, they don't want any kind of lose on their Bitcoin.
Got it. Cool, guys. This has been an awesome episode. I think this is our longest episode yet. I'm going to have to check with KG on the stats. Before we end the episode, we usually do the segment at the end and we clip it out and we put it at the front. The segment's going to be a little bit different. It's like advice to people out there. I think for you guys, the break question is, what is your number one advice to anyone that's looking to build in the BTCFi ecosystem? What should they do? What should they look at? What's like the next wave of innovation that people should be focusing on?
Yeah. Oh boy. Yeah. My advice for people building in the space, if you're based in the East, figure out how to get a foothold in the West, number one. And if you're in the West, figure out how to get access to the East, because it's a geographical emphasis for you. Tech is everything. At the end of the day, tech is nothing. Can you do the basic operation of get me money? That's it. And can you do it as per some of my quotas, right? The biggest advice I would say that you should do is talk to your customers. This is a very important thing, right? It's a very cliche thing. Talk to who you want to be your customers. Don't talk to MicroStrategy. Talk to the corporate treasury that's trying to emulate MicroStrategy. Talk to the people who are like not at the top, but who are basically trying to copy them. Talk to the copycats. Talk to the copycats and see what they think. Because if you can figure out what the copycats want, then you figure out what the big guys want, because they follow the same playbook. It's all the same playbook. There's a rhyme scheme. So basic business style, protocol development style, it's nothing to do with tech. It has everything to do with knowing it's KYC, but without KYC. That's all I would suggest for founders.
Yeah, I mean, my advice would be simple. That okay, one, of course, don't create a problem and then create a solution. Look out for a problem and create solution for it. Then probably you can have 3 founders, one from East, one from West, and one from Middle East. So you cover all this stuff. But I think in general in BTCFi, if you're looking to build something, build directly on Bitcoin main chain in a EVM compatible fashion. So that would be ideal scenario for end users to use it. I think that's what my advice would look like.
That's awesome. I appreciate you guys so much for doing this. I think we're gonna have so many clips come out of this. I really appreciate you guys doing this. Thanks so much, guys. We'll catch you in the next one.
I really appreciate it. Thank you for having me, KG.
Thanks for having us, guys. Here on them.
Thanks, guys. Bye.